there, I'm Sonal Mehrotra Kapoor and you're watching Coffee and Crypto. This is our Diwali special. So Diwali is about feasting, dressing up, meeting friends and family, and also a lot of talk about money. Not just losing it if you're bad at playing cards, but also about investment, right? So we thought this Diwali, let's open up your mind towards different sources and kinds of investment. There is one traditional way, which is of course gold. There is another very trending way of making money, which is the stock market. Well, every day a new high almost over there. And then there is crypto, guys. So we on the program today will do a comparison for you. Gold versus stock market versus crypto. Which one fares over the other? Experts will take you through all of that. But before all of that happens, as always, I need a cup of coffee. Let's go to the coffee table. So gold, of course, traditionally being looked at as the best source of investment, right? Stock market seen as this upcoming space. Crypto being seen as something that should be part of your portfolio perhaps. All this is what experts keep saying all the time. But how do you analyze? We'll analyze for you. All you have to do is watch this graphic. Look at the return on investment that you've got. If you start with gold, from 2016 to 2021, the return on investment would be about 36%. If you look at the stock market, we've got Nifty and BSE figures for you, about 110%, 118%, huge gap over there between gold and the stock market. And then comes crypto, and look at that figure. That ROI stands at 10,787%. But if all those numbers are too much for you to calculate and figure out how big or small the market is, we made it easy for you to understand. So say in 2016, you put 100 rupees each in gold, in the stock market, and then also in crypto. How much would that 100 rupees have become by now? If you had invested in gold, that your 100 rupees would currently be 156. Nifty, your 100 would have become 210. At BSE, it would have become 220. But if you had put 100 rupees in Bitcoin back in 2016, it would stand at almost 11,000 rupees. Imagine that. But having understood that, too many buts over here, but having understood that, when you make investment, put in your hard-earned money into some sort of asset or for which you're expecting returns, return is not the only thing you're looking at. You're looking at safety, you're looking at liquidity, you're looking at volatility as well. So the best way to understand this is by listening to experts in all these fields. And we've got for you a battle going on over here. We've got experts on gold, on the stock market and on crypto. And let them tell you what exactly are the ups and downs in each of these streams of investment. So let me introduce our guest then. Joining us today on CC is Ashish. Ashish is the CEO of CoinSwitch Kuber. He's obviously going to be talking about the ups and downs of the crypto world. Also joining us is Amrish. Amrish is somebody who watches the stock market very, very carefully, invested as well, and will give you all the ups and downs of that. Also joining us is Abhishek Kapoor from the Solitaire Diamond Boutique there. And Abhishek will give you how exactly gold is as an investment option even now. Safe, secure, of course, is what we all know. But what about ROIs? Is the trend changing? So let's open up this battle. Hello, you guys. Happy Diwali to all of you. Welcome to Coffee and Crypto. I'm very excited to share the frame with three ideologies right now, if it were, right? There is a ideology that believes in crypto, there is a space for stock market, and then there are gold people as well. So very excited to be doing this entire segment with you. So I thought we'll give all three of you opening comment time, and then we'll come back to you on individual pointers on how your particular industry sort of weighs in on those pointers. So let's start with crypto there. Ashish, your 30-second start now on why crypto is the best investment this Diwali.
So crypto is a global phenomena which is redefining the way future of companies would be built, right? The next Google, the next Facebook, the next Twitter would be built on blockchain, and crypto would actually change the way we interact with the internet itself, right? And that is why we are so bullish on crypto, because it is kind of redefining the internet itself. And this opportunity lies in the hands of retail users, although a risky asset class, but still an asset class which they can invest in the future.
Okay, that was a quick 30-second on that one. Let me go to Amrish next on why stock markets should be people's choice this Diwali. Your 30-second start now.
The stock markets world over have proven itself to be a consistent investment opportunity. I mean, you have volatility in the short term, but if you look at longer term, it's been giving about 14 to 16% returns per annum for the last so many decades. And the most important for any of the investment opportunities is liquidity. And this is one segment which gives you easy liquidity. So that's one of the reasons why I have been investing in the stock markets for the last couple of decades.
All right, so good points over there. Let me go to Abhishek next, 30 seconds. Well, it's Diwali. You obviously have people already buying in gold. But go ahead with why you feel gold should be a safe and bet for investment this Diwali. 30 seconds starting now.
Sonal, when you talk about Diwali and Dhanteras, and when you talk about an Indian lady who has a fascination for gold from so many decades down the line, gold not only serves your investment purpose, but also fulfills your social need. For example, a social need, you have a wedding in the family and you need jewelry. For example, you are a working professional, someone like you, who likes to wear a nice bracelet, a nice ring, a nice pair of balis to office.
All right, so it serves dual purpose is what Abhishek's point is. Having understood that, let's go to our pointers now and we can go point by point. Let me start with Abhishek since he was the last one to take it. On the issue of volatility, Abhishek, the question is, this is something that gold where really it stands out. But again, the ROI on investment, you saw that graphic over there. Your $100 would have just become about 150 from 2016 to 2021, while the ROI on the rest of the investment options is really great. So how do you think gold actually features there?
Yes, gold might feature a little lower in the in your screen there. But as I said, the social need for gold is way much higher. For example, if my grandmother, say she was 90 years today and she were to gift a chain to her grandson, she had something in terms of investment, which she had bought maybe a 200 rupees a tola she had bought one fine day. So in terms of a social need, when you talk about jewelry, in terms of need, someone maybe with a healthcare problem, you need to liquidate jewelry. One goes back to your jeweler and fetches money. So it fulfills both the requirements. Similarly, for gold, you can invest on it in the form of a SIP, on the stock market in the form of a ETF. So in terms of safety, it has always been perceived as a safe haven. Currencies were pegged against gold at one point. So in terms of safety, there are absolutely no issues with gold.
Right. But when it comes to volatility, let me go to Amrish next at this point. Even the stock market, not as volatile as crypto perhaps, but still in terms of safety, volatility of the market, how do you think stocks fare in the current environment at least?
See, again, if you're looking at short to medium term, surely you'll find volatility in the stock markets. But then if you're a long-term investor, you need not really bother too much of volatility, regarding volatility, because we have seen, if you see over 5 years or 10 years, the stock markets have been giving you, a consistent sort of a return. And like I said, about 14 to 16% consistent returns. But there's one golden rule when you're investing, any asset class. If you understand the asset class, only then I think you should be investing in that asset class. Otherwise, just because a friend of yours has invested, doesn't mean that you have to go out and invest. Because I understand equities. Gold is a no-brainer. And as far as crypto is concerned, I don't understand crypto. So if I had invested in crypto and that cracks 50%, I won't really know what to do. But if the stock market, my stocks, the ones where I've invested, if they crack 40-50%, at least I can take a fairly informed decision whether I would like to hold on to those stocks, buy more or sell, which if I don't understand the asset class, I really can't take that decision. So I think people should remember this one universal golden rule.
Right. So Amrish is saying don't go by FOMO. Go by more information over here. And Amrish, if you don't understand crypto, you're clearly not watching this show. You should do that more often. That'll really solve a lot of problems. But let me go to Ashish next. Ashish, volatility, one of the biggest things that people talk about when it comes to the crypto world, very uncertain. How do you answer that question?
Sure. I think just to address the point, I think there is no better or worse asset class, right? As a user, you should diversify your investments and definitely consider crypto as part of your risk capital.
True.
It's highly volatile, but it also gives you exposure to the global economy, which could redefine the internet itself, right? So it is volatile, but it gives you the opportunity as well. It is highly liquid, 24/7 market. You can start as low as ₹100 into it. And once you are invested, you get to learn about crypto as well and do better, understand it better, and then make a judicious call whether you want to invest more on it or less on it. But it definitely should be part of your portfolio, being highly risky. Please do consider your risk versus reward appetite and only put your risk capital into crypto.
Right, that's quite a sane advice coming in there. Let me go to the next point there, which is the issue of liquidity. And let's see how the three asset classes actually have to say about liquidity. Let me go back to Abhishek first on this one. Abhishek, you already made that point that liquidity fairly easy when it comes to gold. But the point is that investment as gold is not really buying jewelry, right? Like that's not advised. Gold investment would mean buying chunks and not spending money on making and all of that. So the jewelry bit, I'm not sure if I agree with.
But Sonal, if you were to see the population of India and the female population, their penchant for gold, their fascination for gold jewelry. So making charges, when you talk about that, just stands at a mere 5 to 15% today. And considering if you have jewelry in your house, which fulfills your social need, you get a 55% appreciation on it, say in 3 years. And then you lose mere 5 to 8% making charges on it, then also it defines or fulfills a fair investment grade. So, and in terms of liquidity, if you are invested in the form of ETFs in the share market or in the form of SIPs, as Ambrish said, they are tradable 24/7 and very easy to liquidate. If you've invested in the form of gold bars or bullion, then you obviously go back to your jeweler in your town and get them liquidated. It just takes about 1 hour to get any chunk of gold sold. So it's so easy and transparent, and with mandatory hallmarking on gold and silver articles, it's extremely easy to liquidate.
Amrish, on the issue of liquidity?
See, when it comes to liquidity, as far as the equity markets are concerned, as long as you're invested in a decent stock, where the business continues to do decently well, the management is of good quality, then I don't think there's any issue with liquidity because it is listed. And especially when we talk of retail investors, they'll be selling small amounts, liquidity is not an issue. Liquidity is an issue, I mean, if you have invested in an absolutely hopeless stock, which finally gets delisted or suspended, then liquidity is zero.
So that's what you need to keep in mind, Ashish.
So crypto, by the nature of it as a 24/7 market, it doesn't stop on weekends and it's highly, highly liquid, right? It's not just the Indian ecosystem liquidity, but it's a global liquidity, which Indian users can have access to. So by definition, it is one of the most liquid asset class that exists today. And being fractional in nature, you can, divest or invest as little as you want to.
Right. Which brings me to the next point, which is return on investment. And Ashish, let's begin with you. That graph is, really puts into perspective how much return one can really get in all these three segments. Return on investment on crypto is a huge thing. Well, and just to be clear over there, we've picked up Bitcoin only. But the point here is not all coins are going to be Bitcoin, right?
No, absolutely, and even your time of investment matters, right?
Yeah.
If you're picking a point in which the market is going up, you would see staggering returns, but there are also people who have lost money into the market, right? So the time of investment also matters. This is again is a risky market, but has a potential, a great potential as well, which we see through years and years, right? No matter how volatile the market has been, consistently over the 3 years period, it has given amazing returns to the investors. But be cautious. Invest in the coins that you understand about. If you're investing in a bad coin, these returns are not guaranteed anywhere, right? And more often than not, you would end up losing money.
Coming to the point of not just return on investment, was also talking about how volatile the entire system is. If there are whales in the crypto market, well, there are enough bulls, as they say, in the stock market as well. That they also drive the market one way or the other. So how does one make that call?
No, because see, the stock market has been there for much longer than the crypto market. So you can say that it is much more stable compared to the crypto market. And we've seen the sort of returns which the stock markets have generated over the last so many decades. Like I said earlier, it's about 14 to 16% at times. I mean, on an average in a decade, I'm talking of, you get about 18% per annum. But then this does not mean that, say, for example, last year we got 100% return. That doesn't mean that you'll keep getting 100% return for the next 2 years. It's very much possible that the next 1 year could be negative. So I think people should all keep that in mind. I mean, just not go by the recent history and assume that they'll get, the similar sort of returns. So one needs to be a bit careful. One should know what historical returns the specific segment has given, if there is history. Right. Again, I mean, when we are talking of gold, let me talk about gold also. I mean, gold has given consistent returns. I mean, it's beaten like inflation. If you look at inflation, it's beaten inflation if you're talking of a longer period of time. So that's one of the reasons people say that's the safest investment.
Yeah, hedge against inflation, as it's often being said. I know what Abhishek is going to come say when it comes to return on investment. So let me quickly jump to the last point over there, which is the issue of regulation. Very crucial, something that really dominates decision making when it comes to investment as well. Let me start with Abhishek then. While digital gold is being talked about a lot, there are regulation issues when it comes to that as well, Abhishek. So how exactly is the gold market? Obviously, you're going to say compared to the other two, this is a very safe, solid investment base that can be trusted.
Yes, once again, a big thank you to Amrish for being on the side of gold when he said that, when he spoke about the share market and said that it's been there for a longer period of time. Similarly with gold. So Sonal, I think anything that goes up has to come down one day. There has to be an element of profit booking. That's how the bulls make money. So in terms of regulation, the gold industry is very regulated today in terms of mandatory hallmarking, in terms of the exchange traded funds that are listed on the stock markets. And one needs to understand what kind of investor one is. If I am looking for stability, if I am looking for risk averseness, someone who I am today, I don't understand the crypto market. I understand the share market to the extent that I invest only in SIPs. So
Abhishek, you also need to watch coffee in crypto, not just when you're on the plan. That's my only solution to everybody who says they don't understand crypto. It's not that difficult. It's actually a lot of fun getting to understand the system as well. But let me quickly take closing comments from both Amrish and Ashish on this one. Ashish, again, regulation, something which goes in the favor of the stock market here.
Oh, definitely. Those markets are more matured, but doesn't mean that the new markets would come up, would not have the same opportunities as well. As crypto grows, as the adoption grows, as, more and more governments try to regulate crypto, regulations would come in India as well, and Indian government would embrace crypto and form a platform where we not only invest, but build the technologies of the future, right? So it's just a matter of time. Gold and stock has been in the market for long. They have been regulated. It doesn't that, fluctuations hasn't happened in gold and stocks as well in the past when they were, kind of in the unregulated space. The same story would play out in crypto as well. It's very new. It's going to get regulated, and that's where, the real progress of crypto would happen in India.
Well, that would be the biggest news of the year, and we're keeping our eyes on that one as well. Let me give the last comment to Amrish, the voice of reason, also the one who's very nicely sitting pretty in this spectrum of conversation over here between gold and crypto. Amrish, what are you thinking about investments, and how are you making your plans this Diwali?
No, in fact, like I said, I understand equities, so my investment is mostly into equities. But again, at the same time, I find that the markets are extremely expensive at this point of time. I mean, we have seen some amount of correction, but then I think the correction can deepen. So as of now, I'm keeping my money in the fourth asset class, which is cash. I'm holding on to a decent amount of cash, waiting for the markets to calm down, and possibly that's the time I'll invest, because at these levels the valuations are just a bit too expensive.
All right, so that was interesting. Thank you all for joining us on CC, and happy Diwali again to you and your friends and family as well. All right, that's a good note to take a break on, but when we come back on the other side, the biggest news in the tech world and also in Bollywood. Imagine the fans on both sides coming together for Amitabh Bachchan's first NFT drop. Everything you need to know about that coming up on the other side. Stay tuned. So Amitabh Bachchan fans and tech fans have a huge Diwali gift coming up, and that is Big B's first NFT drop. The teaser is out. Of course, NDTV has exclusive details for you over there. But how exactly is this going to work? Well, don't listen to us. Listen in from Big B himself.
So let us say that there is either a poster, a piece of garment that I've worn in a film of mine, or some personal clothing, recitations of my father's poems with a little bit of story behind it. All these become very intimate moments, which then goes up in an auction, and you possess that in perpetuity. It remains with you for life, and it comes with a certification. You can trade with it also in the future if you so desire.
All right, so all eyes on 1st of November when that auction actually starts, and of course we'll be covering all those details for you as well right here on CC. That's it on this week's episode. Have a happy Diwali, everyone. We'll catch you again same time next week. Bye for now.